Well, it's all Kunal's data. So he gets credit for this wonderful analysis what Kunal has done. What we've done is that we've looked at 3 broad patterns, 3 charts. Now these are not stock charts, but these are trends which are based on Kunal's understanding of historical patterns. And these are trends which really will tell you a story. So the first chart which we have, Kunal, it is the Dow Jones chart. Now this is a lovely looking chart. Hara bhara hai, only going higher. Why have you identified the Dow chart in isolation for our viewers? What are you trying to signal?
So first of all, bull market rallies, they are never isolated towards a certain region or an economy. They are, of course, broad-based, and it happens across the globe. Now Dow, we've seen the history of the last 125 years, that how it becomes the torch bearer of sorts for the entire global bull markets as such. Now what's interesting about the Dow chart is that every 10,000 point break for Dow in terms of the price levels for the index, it's never gone back and retested the previous 10,000 mark. For example, when the Dow Jones had managed to break past about the 20,000 levels, 10,000 became a huge base and a support for Dow. It never retraced back even 5,000 points, forget about 10,000 points, back on itself. This was 20,000, 30,000 which was breached post-COVID rally for the Dow Jones, and even after that recession fears etc., we never clawed back even to the 25,000 mark for the Dow, and we moved up higher. Now we are on the verge of breaking the 40,000 mark for the Dow Jones, and this becomes very important because in the context of where we are across the globe, where there could be fears about recession etc., but historical patterns have suggested that whenever a psychological marks have been breached for the Dow, we've never retraced back on the index.
So if 40,000 on the Dow is retraced, that means the uptick in the Dow, I mean then is the blast phase.
It's a new bull market.
Then it's a new blast phase.
New bull market.
And that could be a sustainable bull market.
Yeah, it could be a decade long bull market also.
And what is the possibility of Dow going past 40,000?
I think we are very close. We are just 200, 300 points away from that 40,000 mark, 39,700.
So Dow goes above 40,000, a new rally, a new bull market for Dow starts.
Yeah, officially it should kickstart.
Okay, very important. Now imagine Dow at 40,000. Kunal is of the view that if Dow adds another 300-400 points, closes above that for a couple of days, then a new wave of buying or a real medium-term bull market may start for Dow. And we're talking about the biggest index or second biggest index in the world, only after S&P 500. Second.
So the second chart is where we come back to our markets and how the mid-cap and the Nifty ratio is poised out. So we've looked at the last 15-20 years of patterns, and the Nifty mid-cap, this is the Nifty mid-cap index versus the Nifty 50 ratio. Now the ratio is very interesting because in worst of the bear markets, the index, the ratio gets oversold, which means that the mid-cap index is extremely oversold, and it makes a lot of sense to buy the mid-cap index relative to the Nifty 50. But in periods of bull markets or in overbought natures of bull markets, the ratio tends to top out closer to 2. 2 to 2.2 is the top out zone for the ratio. Now as you can see over here, recently we saw the mid-cap index correcting. Now this is the first sign that we've entered into an overbought territory on the ratio, which means from here on, betting to the next 1 year, 2 years, betting on the large caps should be much more stronger because the ratio seems to be overheated and overbought over here.
Does this also indicate that mid and small cap stocks will fall?
So maybe it could fall, and you have to be very selective about your mid caps and small caps because the major chunk of the rally for mid caps and small caps across the board has happened. Now maybe only quality stocks can outperform, but as an overall basket adjustment, I mean when someone is looking to poise their portfolio, I think now banking on large caps could be much more beneficial.
When you say large cap stocks, are you talking about top 100 stocks?
Yeah, top 50, top 100.
Top 50 stocks have potential to outperform the remaining 6,000 stocks.
Correct.
And this entire data is based on how many years of analysis?
20 years of Nifty 50.
So 20 years of analysis indicates that every time this ratio has gone above 2, that has triggered a selling.
Correct.
In mid and small cap stocks. Or outperformance in large cap stocks.
Outperformance in large cap stocks.
What we are making a case now is that we are not making a case of this is when it happened in 2018.
2017.
2017-18, it coincided with also large caps coming down.
Yeah. But the mid caps fell sharply, much sharply.
Okay. What we are now making a case is that mid and small cap stocks may just languish in there, but because large cap stocks will go higher,
correct,
this ratio automatically will start looking very
different. The relative
different.
outperformance will be much better in large caps.
Okay, and we are talking about top 50 to top 100
top
stocks.
50 stocks.
Be overweight there.
So it's Nifty 50 as a basket.
So 15-20% book out of mid and small cap stocks, move into large cap stocks. That would be a decent strategy.
Absolutely.
Third is the bank Nifty, right?
Third is the bank Nifty, and I think it makes a lot of emphasis over here because what we are seeing as an historical pattern is a repetitive pattern for bank Nifty. So we go back to 2022. There was a corrective wave for bank Nifty, then it formed a cup and handle pattern. We saw major trend line breakout. A smaller pattern over here confined to a small range, but again a similar kind of a chart outcome. A much more broader outcome where you saw the bank Nifty correcting, forming a cup and handle pattern and then breaking past and going into a 3,000 to 4,000 point rally. Now why this is important? Because again this time around in the last 3-4 months of correction, we formed a similar cup and handle pattern for bank Nifty. This is almost like a 3,800, 4,000 pointer pattern for the bank Nifty. So
it looks like a mug to me this time, not a cup and handle.
Yeah.
Right? I mean, it's so large from the previous occasions. This time looks like a mug formation has happened.
Exactly. But the best part, we look out for in charts is that is there a coherent pattern historically? If yes, then the outcome could be almost similar to the previous outcome.
Okay. So if this pattern is to be replicated again, right? That's what historical analysis and chart analysis is. Look at the historical patterns when they've occurred. And when those patterns have occurred, what is the outcome?
Correct.
So a cup and handle formation has occurred for the bank Nifty. So let's say from here, which is April, to election, which is May end or June, till the time outcome is done. Are we in for a 4 to 5% rally for the bank Nifty?
Yeah. So this is almost like a 7 to 8% band for the bank Nifty, 3,800 points broadly. So breakout about this 48,300, 400 levels would be a very critical and a strong breakout for bank Nifty.
So a easy trade in the run up to the election could be go long bank Nifty.
Go long bank Nifty and especially add positions above this breakout level.
All right, lovely. Thank you very much.